Hello and welcome to Insta TV. Today is the 27th of January. You're watching financial news with me, Anna Kasatkina. Amid the ongoing turmoil in global financial markets, the latest inflation data from Australia came as a fresh breeze, delivering positive news to investors. According to the fresh report released by the Australian Bureau of Statistics on Wednesday, consumer prices in the country rose slightly higher than expected, beating the forecasts of economists. Australia's Consumer Price Index, which measures changes in retail prices paid by consumers, showed a modest pickup in both the headline and underlying rates of inflation in the fourth quarter of 2015. The key measure of inflation in Australia climbed 0.4% in the 3 months to December, which was slightly lower than a gain of 0.5% in the previous quarter. Analysts had predicted that the CPI would come in at 0.3%. This time, the biggest contributors to inflation were tobacco, as well as domestic and international vacation travel and accommodation. The factors offsetting consumer price growth in the fourth quarter include lower prices for motor fuel, equipment, telecommunication services and fruit. On a year-over-year basis, the index increased by 1.7% after a rise of 1.5% printed in the third quarter. Economists had expected the inflation rate to tick higher to 1.6% on average. The Australian housing sector demonstrated a significant deceleration in price growth, boasting the weakest levels since the first quarter of 1998. Housing-related inflation dropped considerably due to lower costs of rent and owner-occupied property purchases. Meanwhile, Australia's leading index posted a contraction of 0.3% in December, according to the latest survey from Westpac Bank. The leading index, which indicates the likely pace of economic activity 3 to 9 months into the future, has signaled that the outlook for Australian economic growth will remain below trend in the first half of 2016. Westpac's current forecast for 2016 assesses the annual growth pace at 2.75%, in line with trend growth. Therefore, the signal from the leading index indicates that this forecast may be somewhat optimistic. Following the release of upbeat consumer inflation data, the Aussie versus Greenback pair edged higher, reaching 0.7042. Judging from the subdued market reaction seen on the price chart, we can assume that the exchange rate of the Australian currency will now depend largely on oil prices and the situation in China. In any case, the Australian dollar looks strong enough to resist any pressure from its US counterpart. The US dollar, in its turn, extends losses versus a basket of major currencies ahead of the FOMC policy statement release. Most market participants expect interest rates to remain unchanged amid widespread skepticism regarding the economic health of the country. The fears of the United States slipping into a full-blown recession are growing among large market players, so the US dollar is likely to lose some of its strength in the future. You were watching Daily Financial News on Insta TV. See you back later. Bye.